Welcome to Market Day Report. Welcome to a Friday. You know, we had a holiday on Monday, Veterans Day, so it pushed all of USDA's reports back a day. So instead of getting a weekly export sales report on Thursday, we actually get it this morning. We'll talk more about that in just a moment. First off, how did the markets conclude the overnight trade session? Let's start with the corn market. In Chicago, down a penny on the D's at 4.18, 4.30 on the March, down 3/4 of a cent. Soybean trade overnight was higher. January 9.95 1/4, up 7 3/4, with the March at 10.06, up 6 3/4. This follows a day of sell-off on Thursday. Let's see, wheat, Chicago, front month, 5.31 3/4, penny and a half higher, a couple of pennies higher on the March and July, just under a penny higher at 5.65 3/4. Now for hard red winter wheat, the July at 5.66, up 1 3/4 cents, and spring wheat, December, 4 higher, 5.70 and a half. What about cotton in the overnight session? More lower trade. December 67.56, down 76. All right, Brian Hoops is president, Midwest Market Solutions. Brian, that report from USDA.
Hey, good morning, Tony. And yeah, we had kind of a different overnight market as we actually closed higher in most of the contracts except for the corn. The dollar's a little weaker this morning, so giving us really a much needed technical bounce, and maybe we can extend that a little bit into the weekend. The export numbers, while on the surface look pretty decent, they were also 5-week lows for corn and soybeans. So the corn number came in at about, 51.8 million bushels, soybeans at 57. And of that total, China bought 43 million bushels of the 57, including about 21 million that was switched from the unknown destination category over to China. And then wheat sales were just pretty much routine, about where they have been at 14 million bushels. So we're not going to get a lot of help out of the export numbers this morning. They're decent, but as I said, a 5-week low. Also, no private export sale announcements to talk about. That's the second time this week that we haven't had any private sales. So it's much slower week than what it was a week ago. We saw huge sales in the last couple weeks, starting to slow down a little bit in here. As prices pull back, we might see some more buying interest or more hedges once again against that South American soybean crop, because we factored in a lot of the rain, a lot of the good weather. If we turn hotter and drier for a stretch in December, no doubt we'll go right back up and put some premium into the marketplace. So we're looking for maybe some sort of recovery today, provided that the dollar stays weaker. Maybe we can see some short covering. It's badly needed in the case of the grain markets. Otherwise, there isn't that much news for the markets to really focus on this morning. Crop progress in Brazil and Argentina has been released, and their planting pace for both corn and soybeans is above last year, but also above the normal pace. So they're off to a really good start to this marketing season.
Brian, I want to touch on wheat for just a moment, because I think we talk often about how we're more expensive than other sellers of wheat. Is there a price that U.S. wheat has to drop to where we become more competitive, where markets start looking to the U.S.?
Well, it's hard to put a handle on that price. We're probably fairly competitive right now with Russian wheat prices. The problem is being, what is a shipping cost when we get to these other foreign countries? That's why Mexico is such a strong buyer of U.S. corn, is they can ship it by rail into their country fairly inexpensively. When we have to put it on barge and ship it overseas, it becomes more expensive. And back when I started, the U.S. was maybe the third or fourth port of origin for the world wheat needs. When Egypt would tender, the U.S. would be very competitive in those tender offers, and we'd get some of that business. Now it seems like we're maybe the 8th or 9th country that the world turns to for their wheat needs, just from the standpoint of shipping cost and cost of the product as well. So we're probably competitive, but we're not very competitive when you factor in all the logistics and the shipping costs, and we're just not going to get much of that business. We have a lot of other competition, a lot of the European countries. France has come on, where 5, 10 years ago, they were not a major exporter. Now they are becoming one, and that's true for a lot of these other European countries as well.
All right, hang on just a moment. We'll take a break. When we come back, we'll have Brian and we'll talk livestock futures. Market Day Report continues in a moment. It's Market Day Report. It's Friday, and we're so glad you're with us this morning. All right, we'll open up trade for livestock futures in just a bit, but how did we finish the session yesterday? We'll start with the live cattle market in the red. December 182.95, down $1.07. February 97 lower at 185.10. Now, as we give those, we also had cash cattle develop yesterday. In the south, 185. In the north, 184 to 185, and dressed at 290. So that could be a marker, if you will, as we open up trade in just a moment. November feeders, $1.15 higher, 247.62. The January 45 lower at 243.20. Also yesterday, in the hog trade, we did see triple digits in the June contract, and I believe the July contract also moving above $100 before settling lower. December front month 80.10 on the hogs, down $1.77, and February off 225, 83.77. Let's bring back in Brian Hoops, Midwest Market Solutions. Now, when I look at the export sales, some positive numbers there, I think, for beef.
Yeah, they were decent. They rebounded from last week's really dismal sales. I think we were marking our low last week across the board in both beef and pork, and we've rebounded a little bit. So that's what we can say about beef. It's an improvement. 14 million tons. Pork sales were 19.8. Nothing great there. It's just not very good news this week in the cattle market. As you mentioned, we had lower cash trade yesterday. We have cutout values lower. The packer margins eroding. They're now negative $73 a head. Steer weights came out yesterday. They're a pound heavier than a week ago at 958 pounds. We're 31 heavier than a year ago. It's just, all this news is just kind of piling onto the cattle market this week that there's nothing positive to say about things. Next Friday, a week from today, we have the cattle on feed report. That could be kind of a bright spot maybe for the market as we start to get into some smaller placement numbers. But until then, I think we're going to struggle. We talked about this yesterday, that the cattle market, I think, struggles here for a while until we get through some of these heavier cattle, get through some of these bigger numbers of cattle, and then we get into some tighter numbers in 2025 where we can see better pricing opportunities. But in the near term, it looks to be a struggle for the cattle complex.
There you go, Brian. Always great to see you. We'll see you back here on Monday morning. Brian Hoops, Midwest Market Solutions.